Well, good afternoon, good evening, everybody. Nice to see you. Thank you for dialing in for another live session, live stream this week. I was once again trying to do it on Saturday, as most of you voted to have it on Saturdays. But believe it or not, I can't again this Saturday, as I'm finally leaving Tenerife, going back home to Lithuania for a few days, and before then moving on to beautiful Dubai again. So yeah, really looking forward to that. Last few days in Tenerife. Yeah, definitely I noticed after the last 6 weeks, island life is not for me. It's maybe nice to retire, but missing a lot of the entrepreneurial spirit and inspirational things. So yeah, we had a good time, but definitely looking forward to leaving it. Anyhow, be it as it may, thanks for dialing in. Obviously, want to, as usual, give you a quick update on the news, what's been happening. Obviously, it's only Wednesday. Monday, the markets were closed also in many parts of the world due to the Easter holiday. So not too many things, but still, I want to share a couple of things that I found during the week. And then obviously in the end of it, come to the Q&A part. So please feel free, pop any questions you have along the way into the comments down here, and we'll take it from there, obviously. Right, so first off, a couple of things I was really happy to read about. The German inflation, obviously inflation, a number we all hear too much about in the news, but for a reason, because inflation is bad for our money, right, for our wealth. And more importantly, high inflation also means that the big banks around the world have high interest rates, right, which is nice if you save your money, but at the same time that eats into many other ways how we invest, how we take mortgages to buy real estate and so on. So finally, it seems that the German inflation, at least in Germany, the biggest economy in Europe, being a German, of course, always happy to hear that they are seeing some progress in the economy. The numbers are coming down. When you look over at the overall inflation levels, they are falling, all of them. Obviously, you see the French one as well. The target still, though, is 2%. So that's kind of the target that the European Central Bank has. But overall, it's been dropping, which is good. And that in return means that the ECB, the European Central Bank, might consider lowering the interest rate as well, right? The interest rate that all the banks are charging. And once again, lower rates, is bad for savers because you get less money. Right now I'm getting 4% on Trade Republic and many other apps that I'm using. But at the same time, if it comes down, more people will also invest into stock markets and other equities, basically, because you don't get the money in the bank anymore. So what do, right? You still have to do something with your money, not just keep it in the bank. So that usually leads to more inflows into other investments, which in return brings up the stock prices, traditionally at least. At the same time, if you want to take a mortgage, it also makes it much cheaper. Right now, the mortgage rates are crazy in many parts of the world. For many people, they can't afford it, right? So I think that's actually a good sign, and hopefully they will eventually start it. I think the same will happen in the US with the SEB alluding to the fact that they will be lowering the interest rate this year still. So yeah, I think that's a good sign overall. Another interesting story about Blackstone, also one of the dividend companies that I have in my portfolio actually, big money manager in the world. They have various funds and so on. And one of the biggest funds, real estate funds, so specifically for real estate, they have many different funds, but that one specifically for real estate, actually for the first time could not pay their dividends from cash flow from operations. So normally a fund obviously generates money, and out of the profits, they take some of the profits and distribute to the shareholders in the form of dividends, right? That's the idea. But if a fund or a company also, imagine, earns less than they have to pay to the shareholders in dividends, you might do it one time, maybe twice, but overall, if you do this consistently and you have to take a mortgage, or sorry, in this case, a loan, to pay your shareholders, that's not sustainable. And on that loan, you're going to have a high interest, so it negatively compounds, and that's not sustainable. Now, it's the first time, obviously, it happened here. That's in 2023 for the full year now that it's been closed. But it just, once again, what I want to highlight with this fact is that when you invest into dividend investing companies, always look at how much a company, for example, if I pull up, let's say Coca-Cola, I will just give you the example over here. If you go into the dividends, you will see the payout ratio. That's always very important. It means basically how high is the percentage of basically dividends to profits, right? If they earn 100 million right now, they paying out 68 million. If it was 100%, it means they earn 100 million and they pay out 100 million. If it is over 100%, it would be, let's say, 200%. It means they earn 100 million, but they pay out 200 million. So that's a red flag. So the closer it gets to 100%, that's something really to keep in mind, and it can be quite dangerous at times. So I would always definitely keep an eye on the payout ratio. It's a very important number. You want this to be as low as possible. Now, obviously, some tech companies, they have very low payout ratio because the yield is also very little, right? When you look at Microsoft or what have you, it will be, let's pull up Microsoft, it will be very little because obviously they pay a very small amount to the shareholders. We have Microsoft over here. If we say the payout ratio is only 25%, right? It's much lower. So just something to keep in mind, because if you have a case like I showed you before, that's not sustainable in the long term. Another really interesting story I liked, maybe you heard about it, maybe not, Chipotle. Sadly, they don't have too many locations around the world. I would love to try their food. The food is exactly what I like, Mexican, sort of fast food, healthy food. It's very popular chain. And they now starting to work on robots that basically produce all the food for them. So they're pumping out now 200 burrito bowls an hour. I don't know how much a normal human does, but basically obviously more than a normal human does. Plus they don't have sick leaves and what have you. They don't moan, they have no attitude. They do the work probably much cheaper as well. So it's interesting to see that more and more companies, you can see how it looks, are investing into robotics. And that obviously in turn also will improve their profitability. The same Starbucks, for example, is now working on having robot baristas basically, right? Now, is it going to be nice? Maybe, maybe not. I don't know. Sometimes you have a really grumpy barista or servant. You know, I'd prefer to have a robot. Of course, then you could say, well, all these people being displaced, what they do otherwise. You know, I don't know. I think there will be new jobs created in the future. So potentially, at least for certain kind of operations in F&B, I could see this happening. And yeah, when you look at the stock price for Chipotle, actually, funnily enough, look at the last 5 years, absolutely incredible. 300% gain for a fast food company selling, you know, Mexican fast food in a way, right? If I compare this to the S&P 500 over here, let's say over the, the last 10 years, I mean, it absolutely outperformed the S&P. Right, you see here almost doubled the S&P performance. So really strong. I think more and more companies will follow. We've seen the same with McDonald's, which is already trying to systematize as much as possible, so you have as little human intervention as possible. So again, like it or not, I think it's going to happen to more and more places. Ultimately, we have the other extreme. We have the super fine dining where with the fancy chef and what have you, and this bespoke experience. I think that will always stay, but I think there will also be a push towards more robotized sort of F&B offerings, restaurants, cafes, and so forth. So yeah, interesting to see. Definitely, I understand how profitability-wise it impacts positively. In terms of service, again, remains to be seen how that turns out long term. Then, of course, let's talk about Tesla. They've been down quite a bit. I mean, again, it's full disclosure, not a stock that I own. For me, it's way too volatile and risky. I mean, I prefer investing into Bitcoin because they have the risk, but also more upside potential. Here, I just see more risk than anything else. Anyhow, be it as it may, they've been down quite a bit because the deliveries of the cars have been way lower than expectations. They expected around 450,000 cars, and they only, I think it's still a lot, but obviously the deviation from the expectations from 450 to only 386 is a major deviation, right? So in that way, immediately, once you miss that, you're gonna get punished in your share price, right? That's always what happens. Even though sometimes you outperform, you still drop in share price because some wild headline made the news and people trade on the news often. So again, something to keep in mind. Some of the factors contributing towards was the German manufacturing plant shutdown in Berlin, where I'm from. They had some shutdowns. There was some riots, some demonstration going on. I mean, doing business in Germany is always interesting. But yeah, anyhow. Oh, okay. So somehow that slide didn't want to operate anymore. And yeah, and the soft demand in China. Now, China is another huge player, obviously, with BYD that took over the biggest car manufacturer, EV manufacturing spot a little while ago, ahead of Tesla. And they're very aggressive, and their prices are way lower than Tesla. So I see them even in Europe taking over a lot of the Tesla's market share, actually. So yeah, I think they're gonna really give a hard time to Tesla. And of course, now all the bears coming out, bears, the people who are betting against the stock, betting on the company going down in share price, coming out, saying that it's gonna go to zero, what have you. I don't think so. I don't think the company is going to zero, but I think we're gonna see much more turbulence in the future going forward, because still, I mean, when you look at the share price, the valuation they have, I really liked at the end of the over here, they said what to say, right now it kind of has software multiples, right? Software multiples usually are way higher than a Coca-Cola multiple. Basically, multiple is you take the multiple can be on the revenue, on the profit. You take the revenue, let's say, and you apply a multiple to calculate the worth of the company, right? And traditionally in software companies are much higher multiples because, you know, it's easier for them to scale, they're less asset heavy and so on. A big manufacturing company such as Coca-Cola will traditionally have lower multiples. Here, you know, car companies also have lower multiples than software multiples. But in that case, they treat Tesla as a software multiple, which, you know, some people argue that it is because it has so much more. And of course, they do have amazing software and they do so many things. And once the autonomous driving comes into full effect, definitely it has a lot going for it. Though at this stage, I don't know. For me, I would not be comfortable investing in them. But yeah, let's see how it turns out to be. But definitely something to watch going forward. Then let's have a quick look into the crypto markets. Obviously, something interesting. As you know, I'll continue investing every week into my Bitcoin to build up a bigger holding over there. But yeah, last week, not too much movement, kind of flat a little bit, now down a bit. Over the last 30 days, we're still up 6%. A little bit upset with Ethereum because I still have my last position in Ethereum, which I'm really trying to get rid of. So I'm hoping the price to come back a little bit so I can then switch my Ethereum into Bitcoin and be 100% with Bitcoin. All these other coins you see down here, I mean, for me, it's just unbelievable. Again, you know, some people, you know, they pick one of those lower coins over here and they make crazy money, and you know, all credit to them. You see here, Book of Meme, whatever coin that is, it was in the last 30 days up 1,600%. I mean, well done if you got in at the right time. But again, that's just pure speculations. Then I rather go to the casino and have a good evening and a good time doing that rather than buying some random coin here. But yeah, with crypto overall, I mean, still, if I look at the last 90 days, up 53%. So nobody knows where the price is going to go. Probably it's going to go higher. Probably it's going to go lower. Long term, I'm still bullish on them and I will continue buying. Now, some news in crypto. Lithuania tightens grip on crypto firms. Now, I used to live in Lithuania. I still go there many, many times. I love this country. It's an amazing place. And they've been very forward in many ways with regards to stock exchanges as well as crypto exchanges. A lot of them, when you open them, it was funny enough when I was living in Lithuania and I opened any of the exchanges, and I noticed, well, they're all based in Vilnius, you know, because they've been very friendly towards all these fintech companies. Right now, I saw right now they have around 580 firms currently registered there, but it seems they're trying to crack down and ask them for more regulations and licenses and what have you. So they expect this number to be significantly lower in the future. And I think it's a good thing, right? Because in the past, it was a very lightly regulated environment, as they said. And that's true, right? So I think it's important to have more regulations around it, to have proper safeguards in place as well, right? In case of companies going bust, we've seen that with FTX and others. You know, they say themselves they've been audited, but there wasn't really independent audits happening, right? So I think it's important to have more of that. Because as we go into a more maturing industry of crypto, you know, people want to be comfortable if they invest into a specific exchange. They want to be comfortable knowing that their money is safe there, right? Even though I always say, please don't keep your money on the exchange. Always take full custody of it. You know, I just buy my crypto on Nexo, but as soon as I buy it, I usually basically take custody of it myself, put it on my hardware wallet, so I have full control over it, not the crypto exchange. So that's anyway something you should always be doing. And yeah, interestingly enough, also they highlighted here the countries with the highest Bitcoin holdings in 2024. Can you guess which is the highest one? Let you take a second to think. Well, how else could it be? Of course, the United States. It's always. And interestingly enough, it's not by buying those Bitcoins, but most of them came from seizures through law enforcement. So basically, you know, when they go after some criminals, what have you, or some random exchanges shuts down, and they take possession and ownership of their cryptocurrency. Yeah, I mean, it seems to be quite a lucrative business for them, having 215,000 Bitcoin worth currently around $8.3 billion. So really not too shabby, just by seizing assets from law enforcement, basically. This is quickly followed by China, which funnily enough, technically forbid cryptocurrency, right? Or at least the mining, I believe, of Bitcoin. They are having still 190,000 Bitcoin, so quite significant. And once again, from seizing funds from some Ponzi schemes that were there. Then we have the UK as well, most of it from seizing funds, Germany as well. So yeah, it's very interesting that in the past, and that's why people always say, you know, Bitcoin is and crypto in general is for criminals, even though I think there have been enough talks around the topic that this is definitely not the case. Actually, on Bitcoin, you can trace all the criminal activity because it's a public ledger. Versus cash, you know, it's much harder to trace. So in that way, you know, it's actually more transparent than anything else. But be it as it may, obviously in the beginning, a lot of people used it for the wrong reasons. Now people have seized it, and I think over time that will only build a stronger, more serious industry around it. Then Ukraine as well, some of the seized assets. And then we have the first country that actively buys Bitcoin, at least publicly saying so, which is El Salvador. Their president is quite outspoken and in favor, obviously, about acquiring Bitcoin. And that's how they basically, you know, their new gold standard is where they put the country reserves on Bitcoin. So a really interesting case. Will be, I think, you know, many years from now, we'll read about this either as a real success story, as the first visionary country doing so, or hopefully not, as a failure, and we'll learn from it, and other countries will avoid that. But either way, I mean, a bold move indeed. So really, really interesting. And then some other smaller countries over here. There is talks that potentially one big country might soon announce that they will buy Bitcoin. People saying it's in the Middle East, more specifically potentially Saudi Arabia, because we do know that Middle East in general is trying to attract and become more and more crypto friendly. So I could really see that Saudi Arabia, with their big investment fund, might come up with a statement saying that we are acquiring or already started acquiring significant funds. And I think that would be a huge boost to the crypto prices going forward. But again, remains to be seen. I guess we will hear that sooner than later. Yeah, I mean, guys, that's more or less the news of the week, what I've seen so far. Let's jump into a couple of questions here and see what we're having. Ward, thanks very much for dialing in. Great to have you on the live this time. In the past, we missed each other, but thanks for dialing in. One of the longest members of the channel, so I really appreciate having you around. Right. Hi Kai, Volcano, do you know if we need to pay market data fees in interactive brokers? Market data fees, not sure what you mean by that. If you can specify that, not sure what you mean. I mean, obviously you have some commissions on your purchases, which are clearly outlined. So that's what you pay when you see that. Now, that's pretty low. I pay usually 35 cents, I think, per order. In most cases, irrespective. I think there's certain thresholds, but you know, if I buy even for $1,000 or $2,000, I still pay 35 cents on US stocks. So really quite attractive. So yeah. Rostami, I hope I pronounced it correctly. Good evening, thanks for dialing in. Also a loyal supporter of the channel, appreciate it. Brian, I read that you've been to North Korea. Curious to know some stories from that. Seems so rare. Yes, Brian, I have indeed. It was quite the experience. Back in the time when I was working for the hotel company, I used to be a general manager of a hotel company, and they tried to expand, funnily enough, to North Korea. I mean, most people would go to South Korea, so I was sent on a project there to explore the potential business opportunities in North Korea. I was there for a whole week. I think it was 4 days in Pyongyang, and the other 3 or 4 days in the DMZ, the demilitarized zone, which is kind of at this border with South Korea. And I mean, honestly, it was something else. I mean, I can make a whole video about that. But yeah, basically, I mean, you can't just walk around freely, right? You always have somebody shadowing you after 10 o'clock. I couldn't even leave the hotel at all. I was there with 2 other colleagues. We were having separate rooms. Literally, the whole hotel was empty. So I had one room. The next room was empty. Then my colleague had a room empty. And then the last colleague had his room. And in the middle of the room, you had a huge mirror. So, you know, if you've seen a few videos around spies and so on in the past, you know, when I was undressing in the evening, got ready for bed, I mean, I was waving to the mirror. I said, I hope you're enjoying the views, guys. I mean, you're basically being monitored all the time. It's really extreme. I had to leave my laptop even at the airport when I checked, you know, when I came there, because technically, anyways, you can't use the internet there. So yeah, it was really interesting. I could take some pictures, so I do have some pictures. But even at the airport, they asked me to go through those pictures to see that I didn't take something illegal. So yeah, it was really something else. But it was a cool experience. I mean, I would definitely not go back, but I'm really grateful for that experience for sure. Andre from Paris, bonjour, ça va? Thanks for dialing in. What I've been thinking to decrease my diversification for ETFs. At the moment, I have ETFs on 4 different brokers: DeGiro, Lightyear, Trading 212, and Trade Republic, and moving to IB and Trading Republic. Thoughts? Look, I mean, I'm all for. In a way, I'm all for diversification. I think it's good to have different brokers. Now, it depends. If you have, let's say, a portfolio of 10,000, I believe yours around 20,000, I'm not mistaken, something like that, from last time when you sent yours, which is already a great start, right? Don't get me wrong. But I think, let's say, if you have 10,000 and you have 4 brokers, I think it's unnecessary much diversification. Now, if you have 500,000, then why not, right? Obviously, there might be higher chances of brokers going up or down, or struggling financially. So I think the larger amount is, then I would definitely spread it out. The smaller it is, I think in the end you have too much hassle logging into all of them, then sending money to different things. It's just the ease of use. I would have 1 or 2, which I do myself. I mostly use Interactive Broker. Now I started using more and more Trading 212, because I bought a new ETF, which I can buy completely commission free on Trading 212, and the same ETF would cost me $3 on Interactive Brokers. So in that way, of course, I'm more inclined, as I buy every week, to go with Trading 212. So those 2 are really my brokers of choice. I used to have 4, but I still like the other ones. I store my cash over there, so I use it for different purposes, same as Lightyear and Trade Republic. But right now I'm not buying on Trade Republic, because they also charge me €1 commission per ETF and stock. So yeah, I mean, look, how you feel comfortable, but I think 2 brokers in the beginning is more than enough. And you also want to understand all the features they have. They constantly evolve and so on. So if you have to do this for 4 different brokers all the time, I think you might be a little bit overwhelmed with that. So definitely, sometimes simplicity, less is more, I think. As I said, once your portfolio goes beyond 500,000, 1 million, you may consider adding a 3rd or 4th. But for most people, I think 2 brokers are more than plenty for sure. Andre Guy with IBK, I cannot buy crypto. Do you know what I can do to access it? Thanks a lot. Well, I think you can buy crypto. You need to have a look on there. There is they're working with a different partner, as I understand. But still, it's not quite the same. As I understand, they kind of it's almost like an ETF, right? So you buy the ETF that buys the crypto. So you don't really have full ownership of it. Which, again, if you really understand crypto and read more about it, you want to take ownership of it. So honestly, I wouldn't, in that case, recommend going through them anyways. Paxo, I believe it's called, that they're working with. Have a look, just put on Google Interactive Brokers crypto. I never bought it through there. I won't probably do it. I think it's probably too expensive. And plus, as I said, I want to buy the crypto on an exchange and right away take full custody of it and take care of my seed phrase, basically. That's the most important thing. So I wouldn't want to leave it with the broker anyway. So yeah, my recommendation, probably don't do it unless you really don't want to have to deal with all these things. Then you can buy one of the ETFs. Obviously now BlackRock is probably one of the most popular and cheapest ETF right now if you want to buy Bitcoin. But yeah, as I said, if you buy Bitcoin, you want to do it for all the reasons it has to offer, and not just benefiting from the price appreciation. And then yeah, that's why I think it's better to buy it through an exchange and then take custody of the crypto. What else do we have here? Quantum Lens, hi Kai, when did you start investing and what's your biggest careless mistake? Well, when did I start investing? So probably, like, seriously, my first investment was my apartment that I bought in Dubai. So when I was working there, that was now, I would say, what was that? Probably 14 years ago or something. So quite a bold move from nothing to, committing to buying an apartment. That was quite a reckless move in a way. So you could say it was a careless mistake at the time, because I bought literally in the middle of the desert. There was nothing. They showed me, one day it's going to be a big tower and what have you. But when I bought, there was literally nothing. Now it turned out to be as they promised, and I'm really happy with this. So yeah, sometimes you have to be a little bit reckless, I suppose, to a certain extent. But yeah, so that was really good. My careless mistake? Good question. I don't know. I mean, obviously I bought, in the beginning when I started investing into stocks, I bought individual stocks, that I saw people online say, you should buy PayPal, you should buy, well, I never bought really Tesla, but some other stocks, what I remember, even DocuSign and some crazy stocks, that people talked about. I said, looks promising, without doing any research or really understanding the business model of it. And only later on, once I studied and learned more about investing, I understood, well, that probably wasn't the smartest move, and actually turned out to be quite poor investments. I only put a little money, so I didn't lose it completely, but definitely had a loss on it. So yeah, I would say that was probably careless because I just invested blindly without really understanding something, and I always recommend against doing that. Market data fees, for example, Lithuania, Baltic, equity, top of book, pro fees, month, 20 euros. Wow, okay. I'm not 100% sure what it is, so probably to get a better understanding, even sure I want to do. Yeah, sorry, mate. I'm not sure what it is. I didn't buy that. I wouldn't pay for that much money. Yeah, I'm just buying the stocks that I want. I only invest in US anyways. So in my case, it's only US fees. Just make sure to change your pricing structure from fixed to tiered. In my case, at least it was much cheaper. So play around with this. You can change it in your settings. And now, as I said, I used to spend like $1 per transaction. Now it's 35 cents, which really is not too bad. Because sometimes people think only, oh, they charge commission, it's bad. But sometimes a low commission with a tight spread is better than a no commission with a high spread. The spread is the difference between the buy and the bid and the ask price. So what you see online, the price right now for a stock might be $100, let's say. So you could buy it for $100, but actually when you buy it online, there's no commission. But let's say your broker charges you $102. So technically there is a 2% spread factored inside of it, right? So that's something to keep in mind as well, because sometimes some brokers, they're a bit sneaky with that. Greetings from Croatia. Very nice. Thanks for dialing in. Always so nice to see people from all over the show, different countries. Sometimes I see even my website analytics, people from Papua New Guinea dialing in and checking the website and so on. So for me, it's like so amazing the community you can reach on a global basis. So really, really, really happy. Have you heard of Blackstone? Yes, absolutely. As I just showed before in one of my slides, definitely. I invest in Blackstone. I own them. Actually, it was one of my better investments so far in terms of total return. But yeah, even they having issues here and there, and most recently with one of their funds. So definitely always keep a lookout on the payout ratio when it comes to dividend stocks for sure. Your hotel career is very interesting, inspiring. I'd love a video about advice for young people. Investing in yourself is always the best first investment. Absolutely, fully agree. And yeah, I can do more videos on that in the future. For now, I really try to focus. I would love to in the future talk more about different topics, mindset, even health and so on. But I noticed, the more niche and specific you are on your YouTube channel, especially in the beginning, you get more traction, because otherwise if you talk a bit of everything, then a few people who find you, they follow you for, let's say, a health video, but then the next video is about Revolut investing, and they say, what the hell is this, and they leave, right? So you want to be kind of focused. So that's why mostly I want to talk about finance related. Even here it's quite difficult. Some channels are very niche, they only talk about Bitcoin or only about dividend stocks. I think that's even better to grow your audience. For me, that's too specific, and myself, I like to invest into different things, not just one particular asset class. So I try to really focus on finance first, but definitely I can do a future video on my career background as well. In the past, I was a bit hesitant to share that, but I think now it might actually give more credibility to people, because anyone can start a finance channel these days and say, let me tell you about money and investing. But I think, for myself included, I like to follow people who've done it themselves, right? Who have a track record, even in a different industry, but I can believe them rather than some random guy who looks very scammy. And I think that gives credibility, having been 15 years in the industry. So yeah, thanks for the note. I will definitely keep that in mind for future videos. Thanks. I know you've been to South Korea recently, so yeah, well, hopefully we'll have a chance to do a meeting in person one day. I'll tell you my stories about North Korea then. When can we expect the videos on real estate? Definitely, I think, as I said, next month I'll be back to Dubai for 6 weeks. So there I will do for sure more real estate related videos. I will ask my friend Daniel, who I had an interview with last time. Is a real successful real estate guy over there in Dubai. Used to be my DJ, now he's living in Burj Khalifa, living life and selling real estate over 100 million a year. I mean, incredible. So I'll ask him to maybe give me a tour of one of his buildings, so you can see what you as a potential investor can expect for your money. Because yeah, I mean, I don't know, when you look in Europe, what you get these days for 250,000 euros, let's say, it's still a big amount. But still, for that money, actually in many parts of Europe, you get like peanuts, right? Either it's a really rundown place, or it's completely empty, or a bad location. I mean, let's say, well, yeah, let's say most parts of Europe. In Dubai, for 250,000 euros, I'll show you the apartments. They're still incredible what you get. And then you have a community pool, a gym, a concierge, fully fitted in many cases. So yeah, I think it will be quite interesting and surprising for many of you. So I'll definitely do that. Do you buy the NASDAQ ETF? On my list, I haven't pulled the trigger yet. I bought this week some more of my S&P 500 ETF, which I started liking more now with a low expense ratio. But 100% I will add the NASDAQ very, very shortly as well. Thank you very much. Got the newsletter. That's great. It takes some time to write and to come up with the idea, but I really enjoyed the process, and yeah, hopefully, it resonates with you. So I'm happy that it did in this case. Elita, thanks for dialing in. I'm still a beginner when it comes to stocks and crypto. How do you deal with tax in different countries like Lithuania, or only when you withdraw the gains in the country of residence? Look, I mean, taxation is always a tricky subject because it depends on your own personal situation, also where you're based. In this case, Lithuania. Obviously, most brokers these days, they will give you an end of year tax document, right? So there it's basically highlighted what your taxes were. If you maybe sold something in between or you bought something in between, it will be all listed there, and that you would then submit to your respective tax authority. So in case you just hold on to your investments, your stocks, and haven't sold anything, and also didn't get any dividends, well, then technically, some countries might still ask you to declare your investments, but technically you don't have to pay anything because you didn't sell anything, right? Different story if you didn't sell any of your stocks, but you got dividends paid to you, even if they're not paid to you but automatically reinvested, like some accumulating ETFs, for example. That, depending on the amount, again, some countries have a threshold. I believe in Germany it's like 750 or 900 euros. If it's below that, still you don't have to pay anything. Anything above that, you would have to pay. I believe in Lithuania it's 15%, if I'm not mistaken, on that. So yeah, you would just submit it, and then you would be informed how much is the due amount on that. So yeah, most brokers make it quite easy with that in that regard. Of course, with crypto, it gets a bit more tricky. Now, technically, I think only now, slowly, the governments are catching up with that, because in the past, people were just buying, selling, moving the crypto, and the governments are always 10 steps behind. But I think, the beauty in a way of blockchain is everything is transparent. So even if you did that a few years ago, they might actually come back to you and say, listen, you made a huge profit a while ago, and technically that's still taxable, right? It's not free money that you can just keep without paying your taxes on, unless of course you live in Dubai. So in Dubai it's very simple. On all your stocks, dividends and so forth, there's no tax, but in most other countries you will have some kind of taxation, and yeah, you would just go the same way. I mean, more and more of the brokers now, even Nexo for example, they do have the option of exporting your tax statement, and then you just submit it once again to your tax authority. So yeah, not the most fun topic, but sadly something we need to deal with. Is it possible that you won't be able to sell your stocks if no one wants to buy it? What happens at that point? Look, I mean, that would be very, very unlikely. They said the same with Bitcoin, right? If the price only goes up, nobody wants to sell. Everybody wants to sell. There's always a question of price. There's always, anything is up for sale, right? Your apartment you live in, if somebody gives you 5 million, you will take it, right? So in the end, it's always a question of a price. Everything is up for sale technically. Now, in that specific example, would only come if there is a stock that is hardly traded. So if you invest into a really small or micro cap company, so cap is the market capitalization basically. So normally when we talk about the big companies, they are what they call the mega cap companies. So mega cap is, I believe, anything over 10 billion. If you have a 10 billion worth company, they are traded constantly on the stock market. Now, if you have a company that is in your local village somewhere, nobody knows, they just listed on some random stock exchange, have very little shares in circulation basically. Well, there it might be that there's only a couple of other shareholders who are not planning to sell or planning to buy anything, and you want to sell. So that's why I'm not a big fan of investing into very small companies, while you might have maybe potentially higher gains, because a big stock company like Apple or Microsoft probably won't grow 50% in 2 days. That's highly unlikely. They move slower. smaller companies, because the market cap is small, they can easily double their market cap. But at the same time, here you might have a point when there's no buyers for the company. So you might hold on to your shares until somebody comes around. So that's why I always recommend staying away from that, buying very small cap companies. Are you familiar with BMY? It seems to be a nice dividend company to invest. BMI, not sure. Bristol Myers, heard about it, but again, I'm not too sure about the business model, what they do. I read about it a few times, but yeah, I can't follow all of the dividend companies. I have a few of them where I've done my homework on, and right now I'm not really looking to add more individual dividend stock companies. I'd rather have more ETFs and invest more into ETFs going forward, because honestly, I'll make a future video on this, comparing my dividend companies so far versus actual total returns versus S&P 500. And I was quite surprised when I did it for myself. So, while some did actually very good, others didn't do so nice, So on the one hand side, it's nice to see the dividend payment coming in, but ultimately you want to look at total return, right? So yeah, I'll leave that for another video, but definitely we'll do that. Will you do P2P investments? Look, I did that for a while. I used Bondora at the time. I got 6.75% interest paid to me on a daily basis, which was really cool. Obviously 6.75 on an annual basis, but the payout was every day. It was very liquid. Whenever I wanted it, one click, I had it immediately in my account. I really loved it. But that was before the interest rates were so high. Right now, I can get up to 5%, 5.1, 5.2% on my US dollars in many brokers. So for me, that additional 1.5, 2% with high risk, because don't forget, on P2B, you have the counterparty risk, right? You're basically giving money to, technically, some other people who need the money without much vetting. If you take a bank mortgage or loan, there's a big, long vetting process in place. So usually people who go to P2P platforms, they couldn't get a loan from a bank, so they go to P2P platforms, they pay a higher amount, but then they easily get the money. But at the same time, they can also default quicker and not pay back their loan if they go bust or what have you. So there's a much higher risk to that. And in my eyes, at least right now, when the interest is so high anyways, I don't see that risk premium to be worth the risk of default, basically, if that makes sense. The same was my thinking with the crypto exchange. If I leave, for example, now my Bitcoin on certain crypto exchanges, I can get, I think, 5, at most 6% on my Bitcoin. So not bad, right? 6% for just having my money there. But at the same time, if the crypto exchange goes bust, instead of getting 6%, I lose 100%. So in that way, the risk versus the reward just doesn't make sense for me. And if it was 30% maybe, potentially I could think about, because that's a way higher return. But here, the reward that I'm getting versus the risk of complete failure is much higher. Now with P2P, obviously you may not have complete failure. There's more mechanisms in place to recover funds and so on. But personally, it's not something I really enjoy. Plus the principal, the actual loan is not really growing, right? I like to also have investments where my principal grows. In real estate, the value of my apartment grows over time, plus I get the rent. In ETFs, the value of my investment grows, plus I get dividends, right? So yeah, I like both the cash flow component and the asset growth component. And that's why I'm not the biggest fan of P2P, but I know a lot of people who make good money with that. SAP stock buy plans. Sorry, mate. Congrats on joining there, but not for me. And to your question, GPT Plus, absolutely. I use it. I love it. I use it every day. It really makes my life so much easier. I used to, from running a hotel with 150 employees to now being a one-man show. You do a lot of things. So really, right now I'm a solopreneur. A lot of people ask me to work with me, but right now I want to keep things lean and do everything myself. Eventually, obviously, I might have to hire a couple of people. But yeah, you want to streamline certain things. So even when I write my newsletter, obviously it cannot write everything on your behalf, but you feed it the right ideas, and it just helps you. It gives you a big outline, and then you can amend as you go along. But if you start everything from scratch, I think I would waste so much more time. So using ChatGPT, it makes my life so much easier. Even YouTube description, right? When I put a video together, I say, the video is about that, write me a description, use some keywords so you can rank higher in search, or give me some YouTube title ideas. I use it for so many things, literally. Even sometimes I've shown in some previous video, I do a screenshot of my portfolio and I ask it to analyze it because it can read pictures, so it gives me feedback on that. I ask it to analyze my spendings. I take a screenshot of my dashboard. I have my monthly budget tracker that I have, and I say, analyze it and tell me what I can improve. And it's so funny, like how it really says, well, last month you've been eating out a lot, you should be doing more of that, or you should be investing more. It's like incredible. And yeah, I mean, considering that we're still only at the beginning of AI, I think in a few years how good it's going to be, it's scary sometimes. But yeah, so far I'm really enjoying it and I wouldn't want to miss it. I have been playing around with some different AIs also. Perplexity is quite nice, to be honest. But I'm really looking forward to ChatGPT 5, which I think is going to be a whole new level, and they're getting better and better. A lot of people say, these ChatGPTs or AIs in general are useless. I think it always comes back to how you use it. The better you ask it, the more specifically you ask it to do something, the better your answers. And the more I use it, the more I learn about it, and I really love it and appreciate it. What do one need to move to Dubai permanently? Well, money. The money, and well, money opens a lot of doors, right? To set up a company these days, there's a lot of companies actually helping you with this. Now, I went through the route of using a company. Now, in hindsight, I could have done a lot of it myself. If you go with the free zones, even the free zones can help you. So it could be much cheaper. But I think if you use a company to help you with the whole process, it makes things so much easier. Even the medical, right? In order to get a visa to live there, you need to get a medical examination. I used to do it the first time when I moved there myself. It was so painful. Now I had a company. They gave me a VIP medical. They picked me up. They drove me there. I was done within, 20 minutes. I was in and out, and I got the results next day. So it's always a question of, how much you're willing to spend. I think it's worth it. But if you want to go do it yourself, you can also. So that's the easiest way. Start your company and get a visa through your company, and you sponsor yourself. The second option is, of course, just get a job. Dubai is expanding like crazy, and more companies are moving to Dubai. They're always looking to hire people. So definitely, send your CV. The beauty in Dubai is it's easy to anyone to work, right? It doesn't matter you from Asia, Africa, America, Europe. Like it's literally in the end, what you can deliver and what your skills are, rather than your nationality. So I really like that about Dubai. So yeah, that's it. Once you're there, you figure everything out. People are really open, willing to share. Majority of people, I think, 95% are expats. So everybody's foreigner. So everyone helps each other, and their little communities. And yeah, it's really cool. I definitely like it. Could you share your thoughts on VanEck Dividend Leader ETF in the future? Give your interest, dividend stocks, also your opinion on the overvalued S&P, which has been a hot topic recently. Look, the VanEck dividend stock, I don't know this one, the ETF. I will have a look into it. As per the overvalued S&P 500, I mean, to be fair, this has been a hot topic ever since I started reading about it. It's been for many years. It's overhyped. I remember the same when Apple was the first time crossing 2 trillion. Oh my God, it cannot grow from here. Then we had seen it at 3 trillion. And again, ultimately, unless there's a major reset in the world happening, we've seen it for the last 50 years or so, right? The stock price has continuously, the market at least, grown. The same with prices. I mean, I don't see any major prices for houses being now less than they were, 20 years ago. So, I'm really not concerned about this. I think as long as the economy is doing well, we will see these things continue to grow. Will there be resets along the way? Normally, right? That's what I'm saying. Even when we see the great start of the S&P 500 to the first quarter, I'm sure there will be another reset when it comes down another, 10, 15, 20%. I wouldn't be surprised. And we've seen this in the past. I mean, it's very nice to track the last few years. That's the beauty of investing into something with such a long track record. And we've seen major drawdowns in 1 year of, I think, up to 30% in the S&P 500. So these things will happen. But long term, unless the entire economy crashes, but then I don't think that if the US economy completely crashes, we will see a boom in China or a boom in other countries, because I think that will have global repercussions. And that's why I'm not a big fan of global ETFs, because ultimately, at least for the near foreseeable future, I still think that the US is going to lead the pack, and other countries will follow. And yeah, I'm not really worried about that. But if you are, then yeah, I'm just not sure what are the alternatives, right? To pick individual companies, I think that's even more risky than investing in the S&P 500. Then you could go for a global ETF. But once again, of a global ETF, most of them have 60% S&P component. So either way, it's hard to get around them. So then you should go into real estate. But same story. If the S&P 500 collapses, that means 500 biggest companies, many of them are global companies, collapse. that will certainly impact real estate in your country as well. So yeah, again, I think it makes for good headlines, nice YouTube thumbnails, but I'm not too bothered about that. I live in a country where it's cheaper to buy accumulating ETFs because of tax. I want to buy the Spider 500, but the fund size is only 2.6 compared to... Yeah, look, I mean, that's a good question, but I think honestly, unless you're planning to, first of all, well done for knowing the difference there, because yeah, some countries really have tax advantages, and those really make sense. If you have a tax advantage on accumulating and you're not being taxed on automatically accumulating ETFs, that definitely makes sense. Go for it. It saves you a lot and grows your wealth much faster than if you were taxed on the dividends and then you reinvest the difference. So that makes sense. And I think, look, I mean, the fund size of that amount, that's 2.6 billion, I believe. If you convert 2,600 million, yeah, that would be 2.6 billion. You know, unless you're planning to invest, I don't know, hundreds of millions at one time, that will be large enough to continue. State Street, I mean, the SPDR is one of the bigger funds operated in the world. I think the third biggest in total. So they're not in the business of opening and closing funds. So I think that's sustainable long term. So honestly, I wouldn't be too bothered. If it's less than a billion, maybe, but 2.6 billion, I mean, that's some serious money there. So I think you should be good to go. Guys, hit the like button. You got this. Thanks very much, mate. Appreciate it. How did the casino strategy go? Well, if you've seen my short I've done recently on the 1st of April, recommending to sell all your investments, at least in my case, and go to the casino and double it. Well, luckily my casinos were closed in Spain, so I couldn't do it. But it's so funny, you know. I mean, you know, you would hope that it's quite clear that it was sarcastic, but still, so many people wrote, "No, this is stupid, this guy's an idiot, this is bad advice," and so obviously people don't get sarcasm or humor. So yeah, but gladly many of you watching did, so hopefully it was a little bit amusing. Michele, I hope I pronounced it correctly. On the SPY5, have you investigated which one is the cheapest? In terms of fees, well, I don't know. It depends, I suppose, where you... In terms of fees, it depends where you buy it. Like, I bought it on Trading 212. So here, I think there was no difference where you bought it. For me, it was more important the currency. And I think, let's say, I buy in US dollars because, you know, I think dollar is a bit stronger than euro in the future. And I mostly will, in the future, transact in dollar rather than euro. So I wanted to invest in dollar. And there was only two places, I believe, in Switzerland and in London. And why didn't I buy the Swiss one? I don't remember, but yeah, somehow the London one was, I don't know exact reason. I mean, technically I could have bought in Switzerland as well, but somewhere I remember somebody wrote in the past that there are somehow some extra charges. I don't know, I can't really validate it. I just, you know, like London, it's a strong stock exchange, one of the bigger ones in Europe. So that's why eventually I went for it. But I think there's nothing wrong with the Swiss one as well. But in my case, the London one in dollars was my preferred stock exchange of choice. Cool, guys. Well, I don't know if there's any other questions. We're coming close, 45 minutes. But yeah, I mean, I don't want to keep you too long from your well-deserved evening break. But thanks very much for dialing in. I really hope that next week, so next time when we do it, it will be next week. And then on Saturday, I should be back in Dubai. So then hopefully we'll do it on Saturday because it seems most of you preferred Saturday. Makes sense in a way, I guess. So yeah, because we have some viewers also from the US and they're starting work now, so they're probably going to work rather than watching me. So on the weekend, I suppose that works for most people. So I'll try Saturday. So hopefully we have more people dialing in, but still, I really appreciate you for taking the time. And as I said, I'll promise to do these things weekly. And yeah, next week from Dubai, I'm really excited. I mean, it's funny when I tell people I'm looking forward to leaving Tenerife. A lot of people come here excited to have a holiday. But yeah, I think the next time I come back, maybe when I'm retired, because yeah, if you want to build business and create things and get inspired, that's not a place, sadly, for me. It's a beautiful island, the nature is beautiful, but to make things happen and build a network and grow your business, I think Dubai is really the spot. So I'm looking forward to it. Once again, guys, thanks a lot. And as always, stay healthy, get wealthy, and I'll see you very soon. Ciao.